This is the ceiling test for the stock market. A lot of people right now, for at least the second half of the week, have seen the stock market run higher. They're starting to feel good again. They chase the market like they always do, and they're feeling good. And I understand. When I was part of the emotional herd and saw everybody else buying and saw the headlines in the financial news shows were bullish and telling me to buy, I would buy too. What are you doing right now? Were you a buyer this week, or did you already previously buy when I was buying and now you're just sitting back and watching the stock market go higher? Which one are you? Please let me know in the comments, like this video, and follow for more. What I found out was, when I started doing my own research, is big picture, I think that a new bear market could possibly start as soon as in the next 4 months. I'm also looking at the stock market here, the S&P 500, the NASDAQ 100, the semiconductor index, specifically SMH. I'm seeing all of these right now back up to just about all-time highs, and I'm seeing a lot of indicators that say the stock market looks good and could head higher. I'm also seeing plenty of indicators that say, ooh, there's weakness and the market could move lower. What makes me think that the stock market could break out to brand new all-time highs and keep going is if we narrow down where the money is flowing into the stock market, it's flowing into the NASDAQ 100. Even more specifically, it's flowing into semiconductor stocks. And the underlying technical analysis of the NASDAQ 100, and even more specifically semiconductor stocks, is so far very, very bullish and looks very good. Because those stocks are generally so heavily weighted in the index, they continue to mask the underlying weakness in the rest of the index, and the index is moving higher, which is why if I had to choose, if we break out here to brand new all-time highs or fall from here, if I was forced to pick a direction, I would pick that we do break out. If you would like me to invest your portfolio for you through times like these, comment manage. If you would like to receive my real-time stock trades, comment trades. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC. All of the people that were telling me that crude oil was going to $150 and $200 a barrel, they're crying in their soup. Crude oil continued to slowly come down here. It would be even more bullish for the stock market, even more bullish for you and I, and just for America in general, if we could finally break and confirm below $93.09 a barrel. That is the next big price point that I'm watching for a breakdown below. If that can happen, the market absolutely heads higher. My long maturity bond fund position continues to do well. When people were so nervous earlier and saying, oh my gosh, everything is over, what are they doing? They're selling bonds. They're jacking up those bond yields. Here is the 10-year yield, been falling nicely for 3 days now. This is great for my position. So we pierced below. Let's see how we ultimately close on the day. We pierced below and then came back up above 4.54% on the 10-year. It is bearish for the 10-year yield, good for everything else that we pierced below, because it's like knocking on the door. The more times you knock on a door, you're eventually going to be let in. So if it can continue to pierce below 4.54%, I think we can break below. That would also be very bearish. That would also be very bullish for the stock market. Natural gas down nicely again so far, making an unconfirmed breakdown below $2.90 a cubic foot. And yeah, I may have missed this trade. I may have missed the short crude oil trade. We will see. Let's see what happens next week. But either way, as these prices come down, it's good for America. Congratulations. The stock market is closed on Monday in observance of Memorial Day. Please thank a veteran, because all gave some and some gave all.